Good morning, everyone, and welcome to the European crossover webinar. And we did finish Friday going to new highs, and I'm not sure why people would have tried to go and fight it, but some people actually tried to step in and, fade it, because that's the worst time to try and fade something is on a Friday when anyone who's short from the week has to go and get out. But anyway, there it is. But we did get some data earlier, industrial output out of Spain. And then at the bottom of the hour, we do get Eurozone Centix Index. At the little bit later on today, we'll get Mexican industrial output and U.S. employment trends. And then tomorrow we'll get JOLTS job openings. So there's really nothing in the States other than employment trends later today. We did have non-farm on last Friday. A couple of days from now, we'll get the Eurozone industrial production and core CPI. But that's not for another couple more days. Here in the States, core CPI. And taking a look where we stand, we did get a little bit further dip here in the euro dollar, coming very close into a key support area here. And also with the cable peering back. And let's take a look at Aussie. And just a slight pullback there. And a little bit here in Kiwi. Oh, we'll just go on and take a look here at the news before we get into the analysis. Aussie and New Zealand dollars weaker as investors lured away by higher U.S. yields. Australian New Zealand dollars started the week with falls against the greenback on Monday as the prospect of more stimulus for the world's economy and the resulting higher yields drove investors to the U.S. currency. Yeah, give me a break. The Aussie was last down 73 basis points to 77.10, the lowest since January the 5th, and the second consecutive session of losses following last week's shift in the U.S. Senate. The dollar is supported with increasing costs for stimulus, driving the relative yields higher, which is hilarious because, like I said, supposedly that's the reason why it would drive it lower. But now they say it drives it higher. Talk of more fiscal stimulus as Democrats took control of the Senate, pushed long-term Treasury yields to the 10-month highs, giving the dollar a lift after weeks of losses. Despite the recent falls for the Aussie, a liquid proxy for risk, its outlook remained positive as stimulus expectations and falling volatility support the risk trade. And across the Tasman Sea, the New Zealand dollar was 57 basis points lower. In the bond market, price pressures amid the sell-off in treasuries continued amid wagers that more stimulus package would lead to more borrowing and higher inflation over time. And we'll move on to noise on Bitcoin. Cancel your weekends. Bitcoin doesn't rest, and neither can you. On the first sluggish Saturday of 2021, January 2nd, many people were still nursing the New Year hangover, but there were no breather for Bitcoin, which powered past $30,000 for the first time. This 10% single-day jump was a several of the weekend and public holidays. Price surges that helped the cryptocurrency soar by 2/3 by the start of December. Trading volumes across 6 major currency exchanges have been 10% higher over the weekends and represent a shift from the previous. The wild weekends are posing new challenges for market players and small who face having to staff desks outside the traditional hours, decreasing activity of bigger U.S. investors like hedge funds in the market, which has driven the Bitcoin rally, specifically the use of their trading algorithms. In the past, trading facility operated on the basis of traders buying specific amounts at a certain amount. And of course, we did see Bitcoin going and pair back. Bitcoin markets have always operated 24/7, setting the stage for price swings of unpredictable hours. But during Bitcoin's latest rally, it jumped over fivefold since the first start of the last year to hit a record 42,000 last week. Larger investors have been more central in dictating price swings. And with the entry of hedge funds and more traditional investment managers, the role of the so-called algo trading has increased, contributing to Bitcoin's volatile weekends. Algo traders in the crypto markets using techniques similar to those deployed in mainstream assets, one known as the time-weighted average price, allowing traders to buy or sell a specific amount of Bitcoin over a designated period. Another volume-weighted average lets traders place orders depending on the amount of volume in crypto markets. But this technology exists alongside manual trading, whether by individuals or over-the-counter trading desks. And never sleep either. Ethereum, I guess, head of trading at Gibraltar. Kim was taking calls and booking trades manually for his clients while his partners family organized a traditional meal and open presents. Bitcoin never sleeps, and the sensitivity seemingly never seems to do so. It's just more about it's open 24 hours. It truly is no news. Okay, so let's go and move on to the euro. The dollar gained broadly on Monday as the widening U.S. Treasury yields and expectations of more fiscal stimulus lifted the greenback. Measured inflation adjusted 10-year Treasury yields rising faster. It's heavily surprising that the recent acceleration in U.S. yields has reminded the FX market to end its focus inflation to assume a more comprehensive approach. Everyone's asking whether this changes the weaker dollar. That's why I think we're getting to a bit of a continuation of what we're seeing on Thursday and Friday. There's been prompted investors to trim the bearish bets versus the dollar. And that's it there. Oh, we'll just take a look as to see where NASDAQ is and Bitcoin. And you can see we've made new all-time highs on Friday. I'm not sure. People are still thinking this is going to pair back. And honestly, it didn't make any sense why they would think that. But they still thought that. And then, of course, take a look at Bitcoin. We've gone and paired back. Pretty good pullback. They tried to make this another stand back up here in the weekend over 41,000. We couldn't. We've already had a pretty good pullback down to 35,000. We have set up a little bit of a hammer here. Market may be stuck here for a while down here in this lower end. You can see here we made that run up here at 40,000. We made another run at 42,000, came back, challenged 42,000 again, dipped a little, well, not really 40,000, a little over 41,000. The second run, dipped back, made another run, and then finally we slipped back again, and here we are just above 33,000. We'll see what the market's made of at that point. So we'll have to see how the week starts out. And take a look with the S&P. Also went to new all-time highs. So really it's just a matter of just trying to buy it on pullbacks. And when I say that, you look at some of these other markets. Look at Tesla up here at all-time highs at $800 and nearly $85, close the week at $880. So until things start to change there. But let's go on and we'll move into the analysis. So the euro was saw follow through on Friday's close. You can see here on Friday's close to the downside. Support to start the week will be 22.17 with resistance at 22.96. Well, we've actually slipped past that with resistance at 22.96. We've even dipped beyond that. And let's see, here we are. And actually, if we dip down here, it's actually going to come in right there. 21.53. And support's going to come, resistance is going to come in right there with these touches across here, which will be 22.49. And onto cable. Cable has closed lower 3 of the last 4 sessions. The pair is open to decline to 34.43 with initial support at 34.98. Resistance will be 36.27. So 34.98 on support and potentially a resistance at 36.27. And we're pretty much low down here. Now that'd be a stretch up here at 36.27. So right now, immediate resistance is going to be right there at 35.83. Onto the Aussie dollar. The Aussie paired back slightly on Friday after eclipsing 78 cents on the 2 prior sessions. Resistance to start the week was 78.05 with support at 76.91. You can see here, just gently pairing back. Pretty good resistance support would come in right there at that 76.66, but initially 76.91. Moving on to the Kiwi. Kiwi closed moderately lower on Friday after piercing 73 cents on Wednesday and Thursday. Resistance on Monday will be 72.94 with support at 71.85. Looks like we did take a tag down there to 71.85. Finally dipping back here a little bit. So we'll actually go, you see the high right there, which is going to be 72.60. Finally, looks like it may have lost a little bit of wind out of its sails. Onto the dollar CAD. Trying to turn things around here. The dollar CAD is attempting to forge a bottom over the last 3 days. Support will be 26.32 with resistance at 27.76. So they've already made that move up there, and things are starting to go its way. So there's 27.76. And realistically now, it's going to be right there for support if we were to try and break lower, which would be 26.71. It already has some momentum to start the week. Moving on to the dollar peso. Dollar peso woke up on Thursday and with a reversal only to simply sputter on Friday. Resistance to start the week will be 2023. You see here we've already made a run towards that 2020. With support at 1984. Well, they've got the momentum just like some of these other dollar pairs going its way. So once again, it's going to be 2023. And now it's got momentum going its way. Support would be right there, which would be 1994. Might have a hard time trying to get down to that part now. On to the dollar yen. Dollar yen posted a solid 3 days, reversing back. Resistance to start the week will be 432, with support at 352. It's 432. Just like the other dollar pairs, looks like it's got a little bit of momentum. May have a tough trying to make it that level, so we'll have to go with right there, this body touch and that wick. And it's still pretty high. That's way up there. Still way up there in the stars, but we'd go with 360. I should say way down there. Onto the cash dollar index. So the dollar index is establishing a short-term bottom above 89, simply as sellers have weakened. Resistance will be 90.33, followed by 90.72. Support is 89.55. Well, like I said, they've got a little bit of momentum going their way. You can see right here is where there's going to be the first real test here. So we'll go with that 90.65. They did make it up to the 90.33. They're just above it, but if we're going to see further, it's going to be 90.65. That we'll see that. And then support, once again, it's got things going its way, so support would be right there, which would be 89.92. Onto the Kiwi yen. Finally, a little bit of break in this crazy uptrend that we've seen here in the Kiwi yen. Kiwi yen posted a doji on Friday after challenging 75.50. The pair remains staunchly bullish, but a pause may be in the offing. Support will be 74.51 with resistance at 75.55. So 74.51 here. Looks like we might finally be getting a little bit of a pair back. So we'll go resistance right there. The body close right there, which would be 75.27. Onto the euro pound. Euro pound remains all over the map. Resistance to start the week will be 90.73, with support at 89.68. And onto the euro odd. The euro odd continues its steadily downward flight. The pair tagged the weekly level of 57.10. You can see that right there. Support to start the week will be 56.88 with resistance at 56.88 with resistance at 58.15. And on to the euro Kiwi. We're starting to see some of these pairs finally pull back a little bit. Euro Kiwi finished the prior week at new lows. The pair has supported 68.36, followed by weekly level of 68 even. Resistance will be 69.43. On to the Aussie yen. And the Aussie yen continues to fly with another new high each day. Resistance to start the week will be 81 cents even, with support at 80.16. So we got the 80.16 for right now. And as far as resistance, what we are finally seeing this market start to weaken a little bit to start the week. So resistance would be that body close right there to be 80.69. Onto the guppy. This one's really been all over the place. Look at that. That's just been something else. So the guppy saw a push to a new high for the week on Friday before some minor profit taking. The pair may be open to a minor pause. Resistance will be 41.42 with support at 40.24. You can see here, very tight range, but we're still pushing a little bit lower, turn things south slightly, and onto the sterling odd. Even this is finding a little bit of support here. Sterling odd finished the week, continuing to press the downside. Immediate support to start the week will be 74 even, with resistance at 75.57. And there we go on the FX analysis. As I mentioned, you can see here, I'm not sure why people were trying to fade this on Friday. It just didn't make any sense. Yeah, we're pairing back slightly, but this was more about the people who got stuck short and then they were being forced to pay. So we came back in a little bit. We are seeing, as I said, Bitcoin finally broke a little bit lower. We're trading this 35,000 area. We've dipped as low as almost 32,000. We'll see if this thing doesn't take a bigger pause going forward. Take a look here on the daily. This market has finally started to pause a little bit. And once again, as I mentioned here on the S&P, which I don't really track very much, but for those interested in looking at it, same thing, we had made a run up to these new all-time highs. We'll see whether or not this market pauses. Sometimes you have to get past the first week, and then we'll see this market digest a little bit of these gains. Certainly this week, continue to see this market, motor higher, and I'm talking about equities across the board. We'll take a look at those. And you can see here, Apple, not all-time highs, but not that far away from it. But that's been the bit of a dichotomy with this NASDAQ. So here's Apple, the number one key stock in the index. And look, it's not too far away from all-time highs, but it's not making all-time highs, yet the index made all-time highs on Friday. And it's not just one selective stock you can point at. Look at Microsoft. Same thing here. I mean, it's not that far away, but it's not anywhere that close to all-time highs. Take a look at Amazon. You see here, not anywhere near close to all-time highs. But once again, where's the NASDAQ? Here's Google, a little bit better, but still, once again, not all-time highs. NVIDIA, nowhere close. Same thing with Facebook. Look, it's barely been trying to hang on to 267, but if you look at the NASDAQ, it's over here at all-time highs. The big runners have been Tesla. We can take a look there. And look at Tesla. It's barely been a runaway market. Look at PayPal. Once again, that's close to all-time highs. So it's really been it continues to be a play of the pandemic stocks. We'll take a look at Peloton. Look, there's Peloton. It's pretty close there too. to its all-time highs. You see, eBay also pandemic play, not as as spry as some of the other ones, but still hold up okay. Um, so these are the ones that have actually moved it and continue to move it. If you were to look at PayPal, here's PayPal, obviously pandemic play, Peloton here. You would see, you would understand, oh, that makes sense why the NASDAQ is at all-time highs. But if you would look at the Fangman, you'd be left scratching your head a bit. And that's like I said, so on Friday, like I said, I just basically left it alone. Because like I said, I wasn't gonna fight it on a Friday, but you can't, if you look at the index is trading at those highs, you got to go in and respect that. But the same token, when you look at the key stocks that make up the NASDAQ that have the greatest weight, they're not middle of the road, but they're not making new time highs. All the index is making new time highs. And as I said, you could select one, you could be selective and say, well, Apple isn't. Okay. Well, Facebook isn't. But if you go across the board, none of them are at all-time highs. None of them. I mean, the closest one, I guess, would be Google. But like as I said, it's being driven, continues to drive. So we'll have to see how the week starts to go and play out. But that's what we have. And thanks for joining us here on the European Crossover webinar. And we'll see you in the chat room.